top chefs. He's an extremely busy man. He's cash rich and would love to put some of that spare money into trading, but he just doesn't have the time. He knows he's going to get frustrated. He wants somebody, a professional, to trade for him. He's in luck though. The Stop Hunter has the perfect solution for him. It's called IGOX. It's a fully automated copy trading service built by the Stop Hunter to give you access to global markets 24/7 and to potentially access the Stop Hunter's higher trading returns. Learn more and get signed up by visiting our website www.igox.co.uk. Hello everybody, good morning, 11:30 a.m. UK time. It's time for our regular look at the gold and silver markets. Where is that price heading next to? Now, the underlying theme behind everything for this week is going to be interest rates. No doubt about that. We've got the US, UK, Japanese, Swiss, plus a whole load of inflation data out there as well. So a big week in terms of scheduled news, and that's going to impact gold and silver. It's going to be, well, an interesting one to watch. I'm expecting rates in the US, that's going to be the leading indicator of the week, to stay the same. But I think it's still hawkish underneath, which means people are still expecting those rates to rise, maybe even into mid next year. And that means people will look for other investment opportunities. The opportunity cost of sort of staying away from gold, with those higher interest rates, what else can they put their money into instead? So that might have a sort of dampening effect on gold and silver if we're talking fundamentals there in the long term. Also, as I mentioned previously in these videos, silver more, let's call it more economically related to the growth of certain markets. It's used in things like solar power, more industrial type metal than gold. So growth, the impact of is going to hit that number as well. So watch out for those variables. But as you know, I focus quite heavily on the stochastics. So let's get, the technicals. So let's get heavily into those right now. And we're going to start on the charts with what's going on right now, actually, this morning. Silver, first up. What's going on? We got some upside going in, but really quite flat. What's it trading at? Nearly 23.5. All looking reasonably bullish in the short term. There, silver is going to be similar picture for gold, I'm pretty sure. There we go. Let's just zoom out a bit. You can see actually the last couple of days it's been, not bad growth there, of where we've gone from early 1930s to just under that 1950 sort of area. That's a important key number in gold world at the moment, 1950. But like I said, not too exciting really. Trading 1948.5, roughly around there at the moment. So yeah, like I said, not too exciting. I think it's probably going to be waiting for a lot of those interest rate decisions to lead the way before it moves anywhere substantially. Let's go into some correlation data. Let's see the link between the two. Now, often these guys do follow each other. Silver following gold. I call it the little grumpy sister of gold because it can go off in these tangents on its own whim and do what it likes. So always watch out for the correlation between the two. But unsurprisingly, it's still highly correlated. It's a bit weaker, 0.68, 68%, reducing slightly from what we've seen previously. You can see these spikes off, the bigger spikes away from the price, but still, like I said, reasonably correlated. So not too much to concern us there. And then we've got the gold silver ratio, longer term look as well, back to 2021, the lows there. And this is for any mean reverting type trades. You can see how it works its way through the different levels. You can build strategies around that. Probably says there's some more weakness maybe in the silver if it moves back that way versus the gold, but that's more of a longer term look. You can get it down to the short term views, but like I said, you want to do the statistics and back testing on that before you get into that. Commitment of traders seasonality on gold. What have we got? We've got some sort of seasonality weakness, slightly drops off a bit and then picks on up into the new year. In terms of commitment of traders, this green line here, this is the large speculators. I'd be expecting them to move with the price, and they do pretty much. We look for divergences and confirmation of following, as well as our guides here. And this data comes out on a Friday, so we've got a whole week to wait, see what happens next. A slight bit of divergence there. Again, I don't think it's too much to worry about. We just had that uptick in the price last few days, whereas the data from last week showing a reduction in the long position slightly there. But like I say, nothing too much to worry about. I think it's probably more neutrally flat feel there. And silver, again, probably the same sort of story. In terms of seasonality, where flat week, then it drops off latter part of September before picking up. It's not as smooth as gold. See, it's a much more bumpy journey there, seasonality in silver. So let's call that week bearish. And then the commitment of traders, same principles apply. You can see where that has moved with the price and then down off, reducing their positions. Long positions going a bit shorter there. A couple of positive days on the charts, but again, neutral, maybe weak bearish. And then getting into some longer term price action. Here's the weekly chart for gold. Has anything changed from last week? Not really. We still got the treble top in place, 2080. That's the really key up number there before it can burst on higher. Pullback zone, probably this 1860, 1850 number, and then down to just under 1700, where you've got a lot of price action, loads of touches there on the Fibonacci line. So that seems actually 1690. So that's a key number to look out for. And like we can see, volume-wise at the price, we've got a bit over here that's building up at the moment. Then we've got that gap and then the really big arc down to those 1300 sort of price zones. If that continues and breaks that 61.8 back down to numbers that we last saw around about 2019. But at the moment, it's all about this big chunky block of data between 1690 and 2080, and that's where it seems to be stuck at the moment. And on silver, again, has anything changed from the previous week? Not really, just condensing, squeezing further into this sort of triangle pattern between its moving average and that trend line that I drew down. We've got 1, 2, 3, 4, 5 touches, so anything breaking above that could be significant. Volume again building up at this level, then it's an arc up probably to 30 spot 4, $30.50, and to the downside, if it fails here, breaks the down part of that sort of triangle pattern, 21.2, 19, and then where the load of volume is around that 16 1/3 sort of area. And the trend though, all bullish, short term, just ticking up slightly on the awesome oscillator there. Let's go back to that gold and see what the trend's doing there. Again, still positive. You can see it visually as well. Don't need the indicator to really tell you that. And just a slight uptick again. So very similar patterns between the two. Then if you're into shorter term trading, reversals in the price, catching the right time to get in. Then we have the line break chart, 4-2 combo that I use, would get you in actually quite soon, around that 1950 to get you in. A bit more conservative, maybe you're talking 1918, 1920 for that move down. You can put your stop loss that side if you're going short at around 1973 for that downside move, if that's the trade you want to put on. And what's going on in silver? We've got the short setup building. Again, it would be here and about here. That's 23.38 and 23.23 for a potential downside move. Put the stop there, and you can put this in as an order and keep refreshing the order as the blocks build up. If it keeps on going, just keep building that trade, around it, move them up and down accordingly. Again, you can get faster and slower action by changing the time on the charts here on the line breaks. Got it for 1 hour on both of these at the moment, but you can get faster, you can get slower depending on your time horizons. So that's the line break charts, and into the Renko charts. What have we got? So let's start with gold, bit longer term. We've got $6 block size. Let's pull that back, and in the short term, down the bottom there, stochastics looking positive. Slight uptick in the price. This 38.2 Fibonacci line where there's volume could support at 1913 in the shorter term. Then we've got 1875, 76 there to the downside. Upside, if you can get through, like you see, all this volume and the point of control around 1965. We got 2014, those highs that we saw back in May of 23, 2067, that key number 2080, that 3 touch sort of zone in between there and there. That's going to be the big one to take it on up to 2100 sort of zone, and focusing in more on the short term action there on the gold price. Let's drag that across. What have we got? Point of control right where we're at, sort of at the moment, 1946 area. We're breaking up above that Bollinger Band breakout there, and that was back in 14th of last week, and had the price action gone back in, looking to push back out again into that zone. Upside in the short term, get through the 1950s. We got 1972, and then again shorter term highs 2000, 2008, about there. Downside pullbacks 1900. It slips below those August lows, and we're talking 1890, mid 1870s, and then down to mid 1850s. So quickly into silver. What can we see? Let's drag that across. We've got a more positive stochastic coming in, so looking more bullish in that sort of medium short term there. Different volume profile there. We've got a lot coming up around 23.95, so call it 24. Points of action there as well that's hit. The point of control, like I said, is 23.2 here. And we've got this almost treble bottom here of support price action, and we've got the double top there, so we call it sort of range bound between 22.40 to just over 25. We call it 25 and a quarter at the moment, so we'll be looking for it to break those highs and look for 26 and then 28 downwards. Support back at that, like I said, those treble touches there, 22.44, 21.5, and just about 20. Focusing short term, what have we got? Okay, it looks like the stochastic at the bottom there, building up some momentum. Point of control right through the price at the moment. Not going back too far time-wise. Sort of covers off to August, beginning of August. You see the nice uptrend and then the pullback in the price. Like I said, point of control here, short term 23 1/3. Got to get through all that volume and then be focusing at that next volume and Fibonacci number 24 1/4. And again, that next slip up 24.70, and then the high is 25 1/3. So upside downwards, it breaks. We got that price arc, our volume arc, volume into this area of support around 22 2/3. And if it does get more bearish, we could be talking 21.68, 21.27, 20 2/3 to the downside. Where does that lead us? Well, it's sort of still a neutral pattern. I think, like I said earlier, it's holding for the interest rate decisions to give it a better idea of where it is heading next. You could call them maybe neutral, weak, bullish at best, but it's still a choppy range bound market for both of them at the moment. The economics globally, Chinese demand, economics not looking that great either. Same with the US. So, it's a sort of a tricky market to trade. Look for shorter term opportunities would be the takeaway there. So that's gold and silver. Join me today, 1 o'clock UK time, for my look at the S&P 500. Hit that subs and bell buttons on the YouTube channel to get updates around all that content. Good luck with the trading, and I hope to see you later this afternoon.